Chris Conway joins us now from the Australian Stock Report, live in our Melbourne studio. Chris, great to see you there. What are you keeping an eye on at the moment? It looks like the banks are doing a lot of the heavy lifting at the open, and energy stocks, not surprisingly, doing well as well.
Good morning, Kate. Yes, indeed. Yeah, look, the last couple of sessions we've obviously seen the banks, as you say, doing all of the heavy lifting, which is a little bit surprising. I'm a bit surprised at the risk-on mood leading into the Fed decision tonight. And of course, the oil plays as well on the back of some lower supplies coming out of America overnight, and a few other things going on in the oil market as the Northern Hemisphere moves into their winter and some new oil demand comes online. So yeah, that's what we're seeing today. But like I said, a little bit surprised that we're rallying so hard into the Fed. Yeah, that's taken me back a bit.
And what about the Fed? What are you predicting tomorrow? Markets on balance say no hike.
Yeah, you know what, Kate? I think I'll be the first analyst on the show this morning to say that I honestly have no idea. I don't really have an opinion. Economic theory says that they shouldn't raise rates. The need for the Fed to stay relevant and indeed finally do something after talking about it for so long means that they might. I honestly don't know, and I must have Fed fatigue. I'm getting to the point where I'm not sure whether I care anymore. I certainly care about the opportunities coming out of it, and I think that's the main thing that investors should be focusing on now, is the Fed's going to do what it's going to do regardless. There's no point guessing, but to have a plan and make sure that you're prepared for the opportunities that arise coming out of the Fed decision at 4 a.m.
How do you figure that economic theory suggests that they shouldn't?
Yeah, so well, look, economic theory suggests that you only ever raise rates in an overheating economy, and an overheating economy measured by inflation numbers, which again last night we saw were fairly benign. Indeed, the unemployment rate is low in America. It's lower in America now than it is in Australia, and there are some signs the economy is back on an even keel, but I don't think anyone can sit in this chair or any other chair and say with a straight face that the US economy is overheating, and like I said, economic theory 101 suggests that you only raise rates to pare back an overheating economy. So that's the economic theory side. The other side of it, of course, is that, like I said, the Fed has been talking about this for so long. Markets are pent up. I mean, look at the debate. It's all anyone's focused on at the moment. So, you know, they need to do something eventually. And whether that's tonight remains the question. And I think that's why there's a lot of consternation in markets at the moment.
Yeah, fair enough. And important to have a plan post-Fed, of course. You mentioned the opportunities are likely to arise. Can you just run us through those quickly? Yeah,
most definitely. So, look, if the Fed raises rates, that's likely to see the greenback appreciate. The Aussie dollar will fall against it. And it's companies that have significant US dollar earnings that will stand to benefit. So the Cochlears, ResMeds, CSLs, James Hardie, those sorts of names. There's no need to reinvent the wheel here. They, in theory, will be the ones that stand to benefit the most. But if we see a big pullback in equity markets, which is a distinct possibility given the run-up we've seen into the Fed over the past two sessions, then it would be stay away initially and then start to look at those names a bit further out once things settle down, because I expect some volatility, of course, if they do raise rates. If they don't raise rates and indeed markets rally after the Fed decision in the US this morning, if they rally into the close, then probably the first thing that I would do tomorrow morning would be to buy a bank, whether it be ANZ or Westpac. They're probably my two preferred.
Okay.
I would expect to see an extension of the rally in Australia, and again I think the banks will do the heavy lifting and the yield play will be back in focus. So they would be my plans coming out of the Fed at 4 a.m. this morning.
Okay, and what about the oil price? We did see a nice spike overnight, over 5%. Do you think that the oil price has bottomed now, or am I perhaps jumping the gun a bit?
No, I think the oil price has bottomed for the time being. Don't get me wrong, it will remain volatile, but technically it appears as though it has bottomed. Just looking purely from a charting perspective, if it can clear 48, then it will certainly have bottomed. It will have put in a basing pattern. The next logical move is into 50, and if the market can build some momentum, then 55 is not out of the question. So on the technical front, it looks as though it has bottomed. But as I said before, there's also some fundamental factors that seem to have come into play as well. As I said, the Northern Hemisphere winter, El Nino, the weather phenomenon suggests that we're going to have colder prices in the Northern Hemisphere, so oil demand and heating oil demand should be higher this Northern Hemisphere winter. As well as that, Venezuela is pushing pretty hard to get an OPEC summit and put some caps on production numbers, so that's the other factor that you throw into the mix. So yeah, both fundamentally and technically, it looks like we could see a reasonably sustained move higher in the oil price, 50 in the short term, 55 in the medium term. And our play on the back of rising oil prices would be Oil Search. Stands to benefit pretty well from a rise in oil prices, and of course the potential for a sweetened bid from Woodside or another player as well.
Yeah, okay, that makes sense. So you're keeping your eye on the oil space and perhaps some buying opportunities there, Chris?
Yes, indeed. Yep.
Okay. Chris Conway from the Australian Stock Report. Thanks so much. Appreciate that.
Thanks, Kate.